Naman admitted him?
Might be with another name, sir. Like,
Okay, Anil.
Hey, hi, by any chance, am I audible, doctor?
Yes.
Okay.
Audible.
Okay.
sir, we don't have any.
Mr. Hemant, you just check it.
Like, he might be joined with another name, sir.
Sir, he is
Yes,
here.
yes,
I
yes.
have admitted
Yes,
him.
sir. Admitted. Sir. Yes, sir.
Okay.
Yes, he is here.
Admitted?
Yes, sir.
Hello, good evening, Mr. Hemant. Am I audible?
So we are not live.
Okay, we are on live. Okay. Naman.
Yes, sir. Just sharing the link, sir.
Fine.
Shall we admit the students?
No, let Mr. Hemant admit it.
Hemant sir is here.
Hemant is there.
So,
Hemant sir, good evening.
Am I audible?
Hi. Yeah, you are.
Yeah, fine then. Okay, you can go ahead now.
Okay.
Naman?
Okay, sir. Yeah.
Students can go ahead. I'll share the link. So, panelists, I just shared the link to you. You can share it to somebody that you feel so. Naman, you can go ahead. Waiting for something?
Okay, sir. Janvi.
Yes.
Good evening to one and all. IBS Pune is one of the premier management institutions in India. In 22 years, IBS Pune has grown impressively and achieved widespread recognition in business world, industry, academic circles, and professional bodies. IBS Pune believes that management education should have a good blend of academic rigor and practical utility. The management graduate should possess the right knowledge, right skills, and right attitudes. The career management team of IBS Pune is hosting a panel discussion on the future of banking in era of fintech disruption, covering the following topic: partnership between banks and fintech platforms. On behalf of IBS Pune, we would like to welcome esteemed panelists of today's panel discussion. Mr. Hemant Sheshagar, Director and India FinTech Leader, Ernst & Young LLP. Mr. Saurabh Tomar, Head UPI and IMPS, National Payment Corporation of India. Mr. Rajesh Van Darkwat, VP Product, Zilient Technologies. Mr. Anil Chedamchila, Senior Director, TIAA. Now, I would request Roshi Parmar to introduce our guest of honor, Mr. Hemant Sheshagar.
Roshi, you're on mute.
Okay. Good evening, everyone. I feel privileged to introduce Mr. Hemant Sheshagar. Sir has 13 plus years of experience across fintech, technology consulting, and insurance. Currently, he is the director and India FinTech leader at EY and works with fintechs, financial institutions, investors, and governments in India and MENA region. Before this, Sir has led the fintech practice at PwC and provided strategy consulting to Fortune 200 clients at Boston Analytics. He has also been an entrepreneur running inverted tree solutions before joining the Boston Analytics. Sir holds an MBA degree from Symbiosis Center for Information Technology and is passionate about all things fintech and startups. We welcome you, sir.
Thank you, Roshi.
Thank you, Roshi. Now, I would request to Pooja Verma to introduce our guest of honor, Mr. Saurabh Tomar.
Good evening, everyone. It's an honor to introduce Mr. Saurabh Tomar, Head UPI and IMPS Product at National Payments Corporation of India. Sir has 16 plus years of experience in setting up the channels and improving the sales and productivity, strategic alliances and enterprise business, and driving businesses for B2B and B2C segments, digital payments, UPI, RuPay, cards, IMPS, NETC, AEPS, retail banking, insurance, and branch management, digital product development, UPI, and IMPS. Sir is a computer science graduate and also holds an MBA from IIM Indore. He has been with NPCI for the last 8 years, worked for ING, Visya Bank, and City Financial for almost 4 years for consumer finance, home loans, mortgages from retail branches. We welcome you, sir.
Thank you, Pooja. Now, I would like to request Naman Lodha to introduce our guest of honor, Mr. Rajesh Van Darkwat.
I would feel privileged to introduce Mr. Rajesh Van Darkwat. He has more than 22 years of experience in the payment space, both from a business and IT consulting perspective. He has worked in one of the leading MNC, MasterCard, for 17 years, and he is presently driving a fintech startup. Experience in business strategy and product management. Sir has instrumental in strategic decision for market entries, differentiation, and presence. His expertise includes product planning, product marketing, business development, and commercialization. Seasoned professional in the payment industry, Sir is passionate about working with young minds and loves working with agile and innovative product teams. Continuous research on entrepreneurship and business model is his second nature. Sir has completed his BE from in electronics and power from GCOE Amravati and has completed his MBA from SP Jain Institute of Management, Mumbai. Sir is presently pursuing Executive Fellow Program in Management from IIM Indore. We welcome you, sir.
Thank you, Naman. Now,
Thank
I would
you.
like,
Thank you, Naman.
Now, I would like to request Harshad Navlani to introduce our guest of honor, Mr. Anil Chelamchela.
Harshad, you are not audible.
Harshad, not audible at all. No, your mic is not working. Although you are unmuted, but still not working. No, audible. Harshad, not audible. Yes, anybody else can take it forward then.
Pooja, you can take it forward. Pooja?
Yeah, just a second.
Okay, sorry. Okay, I feel privileged to introduce Mr. Anil Chelamchele, a head of TIAA, seasonal technologist and engineering leader with proven track records of working on enterprise-wide technology solution with multi-team setup in financial service area. with a passion for technology driven by value streams and customer focus, while being a part of organizations like Fleet Smith Barney, Morgan Stanley, Bank of New York Mellon, TIAA. Provide leadership and strategic direction to digital transformation in client-facing channels, including web, mobile, and emerging technologies. Lead engineering team to deliver competitive digital solution to participate and clients on various financial products. Also lead automation and simplification fund for client service partners on various processes to service participants and clients in BFI space. In addition to banking and experience providing engineering solutions from middle office or back office and post-trade processing by designing process for multiple clients. This solution to feed into trading system before beginning of the trade the next day. Lead a team of engineers to build cutting-edge technology solution to propel middle office and portfolio accounting solution to major clients. He is also a co-founder of an NGO startup called JOSHE Connect Foundation that works for need of underprivileged across India and is one of the kind platform for in-kind donation done by non-profit organization. His passion towards technology helped him to educate the concept and take it through implementation of this platform. While the name of the survivor Smita Chilamchile is a face of the foundation in chasing a passion of helping the underprivileged. Sir also managed the technology and the backend activities by making time from his work schedule and mostly on weekends. During the pandemic, this platform has served needs for thousands of needy with timely help for groceries, livelihood, equipment, etc. We welcome you, sir.
Thank you,
Thank
Naman.
you. Thank you.
We will let everyone know when the chat box is open for question and answers. Now, I request our esteemed guests to start the discussion.
Thanks, Janvi, and thanks everyone for inviting us. It's an honor to be part of this esteemed panel, and it's no problem. I think there was one place where someone was not audible. This is very common, so no need to worry. In last 1.5 years, we have just got used to that. So since the topic that you guys have chosen and the topic that we're discussing as a panel is the future of banking in the era of fintech disruption, I thought what I'll do is I'll set up the context of what from a first principle perspective is happening in the world, and then on we can have the rest of the panel start discussing or providing inputs on very specific elements of the disruption which is going on. So we go from what has happened, why this is happening, and the team discusses of what is happening and then what is the future. So that way we can take the entire journey of this disruption and the future which is going to hold for us. And any place, if you think I'm not audible, please let me know, because sometimes it's just not clearly easy to recognize that I'm not audible or something. Okay, so let's start with the most important point of saying this entire financial services. What is it about? It is all about the flow of money. What can you do with the money? And when I start thinking about it, and with my job, I also run India Fintech Diary, a podcast on the Indian fintech industry. And when I speak to the founders, I've realized nearly all of them are thinking about the flow of money or the use of money from a very first principle perspective. And when you think about money from that perspective, you see, if you have money, what you can do? You can use that money to pay someone, right? You can save that money for the future. You can borrow money when you don't have it, and you can invest money for the future, or you can use that money to protect yourself. And it is in the increasing order of complexity. So the most basic is paying. If you really go back to our history, when the barter system existed, no one used to say that I'm going to manage money or use money. It was more about the transfer of value. That means if I want grains, I'm exchanging it for something else. So the transaction was important, and the flow of value was just underlying or embedded into it. As the form of money changed, and that's an important part, because when we say tech, we normally think of digital computers and everything. But in that year and age, even using tablet as a money or gold as a money is technology. And as that transition happened to make money easily movable across borders, easily divisible, so that you can really make it very, very small, the transition started happening. At some point, it happened that the actual transaction and the flow of money got disassociated, and the managing of money itself became a very, very large business. And then you had banks, you had insurance companies, and everyone moving money. And when I go back to my childhood, my father used to say कि आज मैं bank जा रहा हूँ, and then itself was an activity. He was going bank to withdraw money to pay school fees. So actually what he wanted to do was pay school fees, not go to the bank. And if you take this same logic everywhere, you will realize that the entire financial services turned into a mode in which it itself became an activity which was not supposed to be so. And what happened is, the moment money went from physical to digital, and I'm not talking cryptocurrency right now, I'm just saying digitally transacting, the world has started going full circle to saying, what am I going to do with the money is the most important thing. So if you look at the entire fintech disruption from that point of view, that what everyone, every fintech founder to every banker to every insurer who is working on digital transformation, innovation is working towards, is that a person can live his life and do what he wanted to do with money normally, and the flow of money or what can be done with the money is just an underlying thing where he will not even spend a second on it. And you see everything which is happening today, it is towards making financial services nearly invisible. Then your life becomes important, the flow of money is nearly invisible. So I think that's what is driving all this innovation. It has just so happened that all the innovation which has happened on smartphones, on internet penetration, on financial literacy is accelerating or is driving this transformation which is happening. And one more thing which has further driven this forward is pandemic now, considering even people who are a little skeptical of whether I should do it or not, whether I should do a digital transaction or not, have not got used to it. Now your money is just numbers on a database. I think those are the things which are really driving this transformation. Now I just will request other panelists to just weigh in on the different aspects of what you can do with the money, and shed some light on what's happening there as far as innovation concerned, and what is the future for that particular segment.
Shall I go next, Hemant?
Yes, sir. Please go ahead.
Okay. Okay. So first of all, very good evening to all of you, and thank you very much for inviting me on this panel. So I think Hemant rightly set the context when money and the payment is going invisible, right? And this is rightly the way it is happening. Actually, we never needed money for money purpose, right? Because ultimately we needed money for some purpose, and now those purpose or those endpoint is being taken care of. So the way happening, I have not used cash in last 3.5 years. I have not used my wallet. I have not used any debit, credit, no, nothing. I'm just using my mobile phone for each and everything. So I think it's a clear indication. And when a person like me who is little old, right, I can vouch for this, my daughter and the new generation, why they will have even cell phones, they I could foresee that even those kind of form factors will also change. So from the tradition days, where the exchange or the barter system used to happen, from that, then currency, then coins, and then all that things are change exchange changing modes of the payment modes. Right now we could see, right now we are in era wherein the digital is taking place, but I think it will go beyond this. After some time you will see that even neuro or the that kind of stuff will happen. Chip is there in your hand or something, and you are something, or you are just saying something. So that is already happening. So we have couple of use cases wherein the voice-based payment. So I'm talking to Alexa or something, and saying, hey, why don't you pay my my kid's school fee, and that fee is being paid, getting done, and voice becomes my authenticated way of authentication here. So I think that time is coming. I will say very, very interesting time we are in. This is saving a lot of time, saving a lot of efforts in terms of collecting money. So if you look at this, lot of infrastructure which we have created in past. And a good significant amount belongs to the collection of the payment centers, right? The payment centers. So if you look at the railway stations, railway stations or the ticket counters, and then your bill collection counters and all that thing, wherein this is nothing but, my core business is to sell electricity. That's my USP. But I'm investing, putting money and efforts there in collecting money and exploring, how can I collect money. So I think this is a very, very interesting era for doing business. And I think if we look at all the examples, which is online business, be it Swiggy, Zomato, or all that, Amazon and all that thing, this is a clear example of, digital payments, right? Because that is one way these guys have got a neck, and hence they could able to explore, or they could, multiply their business. So I think interesting time, and especially in the smartphones are going more and more smarter, your net speed is going more and more faster, and your data being cheaper in India, cost effective in India. That makes a wonderful combination in countries like us, and it is important. So, and I would also like to add one critical point why digital payments and the digital transformation is important. In last 2 years, while we were going through this corona or the COVID pandemic and all that thing, I think touching anything is a crime. And this and just imagine how many hands one note is being exchanged, one note is been going through. So how many people is been using that note and all that thing. So physical currency always always have some kind of bacteria and all that thing. I don't know, but I'm saying it is always safe to just take your stuff and do a digital payment. So that is precisely on the digital payment side. So that's all from my side. But yeah, interesting topic and interesting time. That much I can say.
Yeah, I think thanks Saurav for putting it in the right spirit of what exactly is happening in the world now. Thank you very much, IBS, for inviting us, and thanks Hemant for setting up the context. So basically, we started out with the what is really fintech and why we are talking about it now, because that's where the world is going in respect to the financial systems. As Saurav said, probably I consider myself very fortunate, as I've seen almost 3 major transformation throughout this fintech life. When we were school going kid, I mean, probably as Saurabh referred to, that we have seen our grandfathers going to bank for some kind of relationship, some kind of transactions. Then we see the next generation where we were started into the corporates, and we see something called plastic coming in, and that plastic card was getting a major capture everywhere. Those were the slow transformations where currency in the form of physical currency getting converted into plastic. But last 10 years, the transformation was too fast and too dynamic in terms of getting from plastic itself. Now we are moving to a stage where we will not have any kind of physical format to even do a payment transaction. So you can expect. I mean, when I jokingly said my son, he doesn't go for a physical currency. He always look for a card or a mobile operation. So that way, the generation is also so fastly adapting to these new fintech structures. So that's a very interesting, really interesting area now, and it's the way it is speeding up. It's too good. Now let me just touch upon to start with. I mean, we've seen as Mr. Saurabh said, the way payments have formed change. There's another area where usually this is being seen, and that is the lending, where the whole payment, the whole fintech structures have created the major difference here. Let me just quote one kind of scale of threat which was mentioned in Financial Times a couple of years ago about a banking industry. They said the aim of fintech is to inflict death by 1,000 cuts. So fintech startups are so nimble and each focusing on a small part of bank's business model to attack. They're actually taking out something from bank. That was the picture initially created. And even in last 3 years, if you have, I'm sure you must have observed the new terminology which are getting so operative, like P2P, there's blockchain, decentralized ledgers, there's chatbots, big data and AI, API, ML. I mean, there's a lot of terminologies came in. And basically, these are all being used by these fintechs to disrupt the model of the banking, not the bank. Initially, it was seen as kind of a threat. But if you really look at it, the way it was structured, it was actually disrupting the way the banks used to operate. So new systems usually like new payment system came in like PayPal or Alipay or today Google Pay or Apple Pay. So they have come up with their new payment structures. On the transfers and remittances, new fintechs came in, which they challenged the incumbent system like Western Unions or MoneyGram. Similarly, on the lending side, lot of new companies started around 2014-15 in this a new way of the processing of lending. To name few, like there's a lending club in US, there's Alibaba in China, even in India there are a couple of them. There's this lot of new structure have started in that lending. There's one London-based company started offering loan to the postgraduate student directly without having any banking references. So this is how the fintechs have started impacting the lending business. So the main question was, what is the real impact here on the lending business by the fintech? Is it going to challenge the traditional banking, or is it going to supplement or support the banking? So even if we say fintechs are actually, they provide services that traditional banks usually, they are not able to provide it so efficiently, or sometimes they are not even doing those kind of services. Fintechs provide those services, but they basically provide it with more efficiency and in an unbundled fashion. Usually, if you look at all traditional banks, all the services come as a bundle. I mean, you have to be tightly connected with the bank for some kind of relationship, and then you get to chance to get for some loans or some lending options and so on. But these new platforms, they started, to give an example, like crowdfunding platforms. They transform saving into loan, savings from loan to investment, but in a different way. They use a big data. Not as a long-term relationship or a soft relationship which usually been done by the banks. They tried lenders and borrowers matching each other so that there's a direct connectivity without any intermediaries, unlike a bank. So there's a disintermediation in the overall use case when we say fintechs impacting those lending. But other side of it is like there are boundaries to fintech as well. So it is not that fintech, when performing, they're doing everything 100% on an independently. If you really look at it, they cannot offer. If I look at the lending structure today, even though they have started offering the lending platforms, they cannot offer diversified opportunities without having a risk on their books. So that is something which is very critical. Or even they have carried out a lot of payment activities, but those payment activities have banks in the background. So in a way, they have something as a relationship with the bank without directly replacing the bank. So we can safely say that banks, though losing some business and some margins to these fintechs, basically these two will complement each other as we move on in the next era. Probably it may happen that a bank will focus on the back-end jobs which are not customer related, like all end-of-day business relationships, all end-of-day transfers, and fintech may focus only on the customer part of it, where capturing a customer and processing customers could be the main role of the fintech. So that is where I see that both will complement each other. Now, if I look at the lending part of it, lending usually there are 2-3 critical factors here in lending. One is that the credit risk, which is usually deciding factor when you say you get some kind of funding through a loans. So if you look at bank structure, bank usually it's like transmuting all financial asset and liabilities is realized through the transformation, the maturity transformation, where you see that short-term funding used to grant long-term loans. And that's how they, your deposits get into a loan mechanisms. And that's the basically bank's mechanism of funding those loans. But fintech companies, if you really look at it, they do not have this structure as of now. But still, they have figured out how we can work out on the credit risk and how the loans can be given to them, given to the end customers. Secondly, if you look at it, one is credit risk, second is payment system, how the loan or how the lending is going to get executed throughout. Bank has an ability to provide instruments for this liquidity and risk management, which is where they can supply those payment services. And there's an obvious economies of scope if you are providing same time liquidity and payment services. Naturally, customer facing a liquidity, they are in a better position if they have a kind of account to fund that a loan kind of scenario. So those were where banks have initially created the structure for those payments. But how can fintech offer those services without having those floats which bank operate with? So naturally, there has to be a better regulatory requirements other than the banks, or rather, I would say lighter regulatory requirements other than the banks. There has to be a good technology which allows this fintech to provide, I think, similar payment at very lower cost. And then there has to be a different and I would say more effective economies of scope than which is available in the bank. Now, if you look at this first point, which was about regulatory, now naturally it is not very far where regulatory also has started getting into it, trying to have some kind of regulation for fintech. So naturally, today they may not be in 100% in line with what banks has been put across by the regulators, but slowly they are also getting into that. So naturally, I would say more these fintech become relevant like a bank, the lower there would be room left for regulatory arbitrage. So there's a regulatory slowly is coming in. Technology advantage is also not very, I wouldn't say a long run, it's a short run, because new players can quickly copy the technology. And secondly, more importantly, in India at least, all the primary players in banking have already started investing in the technology. Though they may not be as flexible, as nimble like fintech, but at least they have understood. Usually bank can see the threat in terms of economy going down or they kind of slowdowns. But this technology is something which is not till now was not seen well as a competitor by the bank, and now they have started. So all our major private players in India have already started putting enough efforts on this technology part. So there is no clear reason why in long run bank would be able to compete well with the fintech. And then third, but most important part here is the presence of economies of scope, where fintech, in addition to payment services, they'll be complemented with other services as well. So this basically arises between provider of payment services and others, is typically like the network externalities, like Amazon offering something on or Apple offering something on consumptions, or Google something offering on internet services. So there is a possibility of economies of scope here. So it is necessary for these kind of transactions to happen. It is necessary that both side of the lender and buyer have to be on the same board, so that it becomes a single transaction. It becomes a straightforward transaction between the two parties. So that's why you would have seen lot of fintechs have started offering payments and other lending services or credit services, mainly because there's an economic of scope in terms of information processing, purchase, payments, or internet search in terms of executions. So two factors: credit risk and the payment processing. And the third important factor is information processing. Like all these lending has to have some kind of a basis of information for risk calculation, for distribution, for collection. So entire sector is built on this information management, which can be data storage and processing, or there can be a cloud computing on demand level computation capacity at lower cost. There can be data transfer at low cost, and there can be data availability, which is more like nowadays being used by all AI ML fintechs for any kind of decision making and process. So there are multiple information processing options which needs to be looked at. These type of information that these banks have and these fintechs have, and the way they use is actually a deciding factor here. Fintech usually function on big data and on standardization of this information so that it can be used for different types of executions. Whereas bank most of the time works on soft and I would call it as a relationship-based information where there's most of the time all the loans or the credit limits or all kinds of sanctioning happens with the relationship-based execution or relationship evaluation by the bank. So that is where there is a clear benefit of information technology for these fintech sectors, because they are operating both on production of new financial services and distribution of these financial services. So as a production, huge information of the population is collected and analyzed nowadays. And this is something which is very much common at fintech level, because that data is now a deciding factor from them. There's a large client base, their past behavior allow them to have some kind of predictability in preferences, needs, trends, and accordingly offer those right lending products at right moment with the right price. And that is where these fintechs are actually doing a very interesting part of it. So it's like depending on why and how you have performed in the past, they are coming up with a different kinds of structure of the product, different kinds of features of the product. So big data and machine learning, artificial intelligence, these are key ingredients here that are dramatically changing this landscape. Application and effects of this industry is growing and very, I would say, from screening the borrowers, from pricing the risk, to an distribution and actual collection. So there are a lot of factors which are being used in the part of production of these services. The second part will be that distribution of the service is deeply affected as well with the new channels, flexibility and a matching part of it. So there are online platforms available where lenders and borrowers have deals in place of or agreements for those kind of lending processes. And there's large information base which allow these fintechs basically to access the characteristics of their customers, to implement those price discriminations in terms of charges or margin what they want to. So there's also a scope in terms of those discrimination processes. Now, what matters most for this is that the use of the tools, like as I said, ML or big data, is the ability to recognize those patterns very quickly by digging in a very large data set. And that would be virtually impossible for one as an individual humans, as well as a system like a bank, where most of the processes are very I would say incumbent and to be challenged. So naturally, even standard regression economic models can be seen as pattern recognition. So there are those things are not very practical, at least in some section of the banks. And that is the reason fintech has a really, I would say, an advantage here, how they can compete with the bank. So they, while competing, they just have to address some questions like who owns and has access to the information, or processing of hard information as a huge legal and social implications in terms of privacy. So how to address that privacy issue, how far hard data can replace the personal relationship or the soft information which is usually been seen by the banking sectors, and what different incentives each party will get, whether it is fintech or whether it is bank or whether it is fintech and bank together. So basically, these all factors decides the whole lending process. As I said, credit risk, Second is where how the payment of those lending will work. And third is then how the information is processed by those players, fintech players in the market. Now, if we come to the Indian market and see an Indian market, we are already into those digital part of it. But reality wise, 60% of the people in rural areas, and that's something was done by one of the research, where 60 to 70% people does not, they stay in the rural area. They are not fully banked. Some of them are still getting covered through financial inclusion. If I talk about the credit facility available, the organized credit is available only to say around 15%. So there's a vast gap here in terms of availability of credit to individuals as well as those businesses. And traditional banks are not very, I would say, I won't say not ready, but I would say hesitant to give loans to them without having any right credit information or score or risk profiling. And in this COVID, it has become now really a roadblock for a kind of free lending, because people have lost their jobs and they are cash strapped. So there is challenge for traditional evaluation system also to define the credits to be given or even to identify the risk. Secondly, the SME sector, or what we call as a micro, small and medium enterprises, where these are the credit starved segments. I mean, all big businesses are able to raise some funds, but these SMEs are still fighting on for those credit requirements. These are challenges from Indian market, but on the other side, there's a brighter side in terms of the infrastructure, which is improved in last, I would say, 8 to 10 years so fast. There's a good amount of phone penetration, whether it is smartphones, high-speed internet services are being made available at various locations. So basically, these benefits have reduced the customer acquisition cost and improved the credit access to this rest of rural population. So this is one, I would say, a point from where a lot of lending businesses have started cashing out in terms of accessibility to this section of the society, and then probably providing them the necessary credit out of it. Even Government of India has also supported, they have, I think recently, a couple of months or around 5-6 months back, government has allocated a good fund for those financial services to get them into financial inclusion under the lending platform. So that's where they are. The context is set in India. Usually in India, these lending markets focus on two products. If I really focus on these specific lendings for the lower section of the society or the SME business, there are two types of loans which are usually nowadays being targeted by this digital lending platform. One is consumer loan. According to one of the reports which was presented by ICICI, consumer loans in India will hit nearly about 1.34 trillion by 2024. So naturally, there is a huge scope in terms of offering those loans in this section. The main drivers will be the smaller and tier 3 cities where there is a demand for these kind of activities. Due to pandemic challenges, there is a liquidity crunch and there is a strong demand for this consumer durable loans. So we can very well see, and by the time your 2020 batch comes out at 2022, you would surely see that this consumer durable lending would have been captured a good market share. And second is those business loans, as I said, to SMEs. One of the challenges for these SMEs is basically, I would say, unavailability of a very authentic credit data. So because credit process is based on traditional scoring methods, so naturally these SMEs, because of their not reaching into the right endpoint for this credit part of it, they will not have a good score, and that way they are not getting those loans required. But this is slowly changing with an alternative scoring method which is coming in. Now with this all, approaches, you would surely see following lending, like there is a peer-to-peer lending available by the digital lending platform. Basically, it is a methodology where borrowers can request a loan from another individual without involving any financial institutions, which is called P2P lending. Slowly, this is taking up. There are challenges in terms of not considering those risk on books and all typical risk-related challenges, but this is also going well. Where there is no bank intermediation, where individuals and companies can invest in a small business directly. So those platforms basically match borrowers or lenders. Some allow the lenders even to choose the borrowers, and in other form of one of the form of the package of the loans and so on. So that's where the second option we have. I'm sure you must have seen there's something which called as a loan at POS, the point of sale, where you go and you purchase something, but that can immediately get converted in the form of loans. Very famous, you would see the Bajaj Finance is offering it, Mahindra is offering it, and so on. Then there is a platform for crowdfunding as well, where businesses that need to raise capital through an investor, they do so by getting on the platform, sharing their market potentials and getting loans. And there's something nowadays been also famous called buy now, pay later, where this is an upcoming mode where usually, and especially for the millennial generations, where they prefer to pay later, but to use that facility immediately. So these are instant loan in a small ticket size that can be given, that is enabled for the customer to purchase an item and pay later. And jokingly, I mean, a couple of days I have seen even a kind of a tagline says, marry now and pay later. So this is how the new models are coming in terms of usage for those lendings. So you would surely see for those typical lending markets in India that there are specific business models coming in. One is called as an online lending business model, where lending business completely digitize the journey. There is an AI ML based algorithms which will do a kind of credit underwriting, which will identify the cost of customer acquisition and accordingly offer a loan. There are credit data models as well, where credit bureaus like CIBIL and some mainstream data aggregators, where they have the platform to offer the scoring models to the banks. So this is also one way of creating a fintech structure which will complement the bank requirement of scoring. So instead of bank going through the rigorous and slow process of identifying the customer's credibility, they can directly approach these credit data modeling models and get those necessary requirements. And there's something called as there's one more called model based on the marketing structures. So third-party marketing agencies like Bank Bazaar or a few, where they connect with prospects through marketing channel, identify the requirement and connect them to the lending endpoints, can be banks or can be those fintechs. And there's one more, which is traditionally complete lending platform being offered, where end-to-end services, starting from your lead, identifying the end customers, online lending, authentication, risk assessment, distribution, collection, everything is usually done by one single platform. I think PayU in India has already started working on it. So those are typical lending structures which are running in India. I'm just trying to give a kind of perspective on how the lending is getting structured with this fintech, and there are a lot of new trends have also started. Like there's a contactless lending where everything is done through digital modes, or there is a credit risk mitigation structures where cutting edge technologies are being used to access the credit store, so that this unconventional data sources can be used to identify those credit behaviors and generate risk profile. Not only that, even at collection also, after distributing the loan, these technologies can be helped to understand the repayment behaviors and other parameters of the individual in the past, in the present, and accordingly define those risk loans. So that's how I would see that how a lending is getting impacted with the fintech. I'm sure I personally view it's a very positive on that part, where there is a fintech ecosystem which is in a very growth stage. There is an increasing participation from all non-traditional bank players. Regulatory, we have a lot of regulatory coming in, and I'm sure in future as well, regulatory will also have a kind of a structured approach to bridge those kind of loopholes in the system. And because of that, there's a partnership coming in between those banks and those fintechs. So I'll just end on a note that though fintech companies are providing services like or rather trying to be disruptive to the banks, I would tell them like a narrow structure of bank, or I would say a shadow bank, where they are offering the services with an efficiency and a lower cost. But instead of replacing the bank, basically they will be the I would call a complementary product to the bank, and slowly to be treated like a bank only. Thank you. Over to you, Anil.
Okay, thank you, Rajesh. Thank you all for inviting me and having me here. It's a privilege to talk and listen to all the good friends here. Hemant said it right in context, and I want to actually take that question what he said. Why should I go somewhere and take out money? Why should I even go somewhere to even do my financial transactions, right? I mean, in today's world, when I think about it, how we did it in the past, it just makes no sense. Absolutely, and just to give you a perspective of how this all happened, a very different perspective, just for a couple of minutes, is when we go back, maybe 20, 25 years, 30 years back, the top market value companies around us are either, in the world are probably either automotive like General Motors or General Electric, or, organizations and companies like that. But then, 10 years later, companies like Microsoft came in, and if you fast forward, zoom into 2000s and 2019s and all, technology companies have taken over. The Amazons, the Microsoft, Google, Facebook, all of them have taken over. And being a technologist, first of all, I would like to call it as tech fin rather than fintech, because tech is driving finance now. It's all about how technology is driving. And Rajesh talked about in depth about AI, ML, big data, and all of that. And we it's very important for us to think, what is this, right? And if we go back to 2007, 2008 time, when the smartphones came in, and it doesn't make sense if I ask a question, how many people have smartphone today on this forum, because pretty much it's 100%, I believe. While there was a perfect storm happening, the world was all going down with the financial meltdown in 2008. Smartphones were being bought. There was a great opportunity for people to disrupt what was called banking, right? Where you go to a bank, you talk to somebody in the bank, you wait in a line. All of that was happening, and these smartphones came in and changed the whole thing, right? Two words, right? Innovation and disruption, radical thinking. How do we get out of all of that and focus on the actual task that we want to do, which is transaction? Whether you want to lend, whether you want to borrow, whether you pay, those are the verbs that we want to focus on. And I don't want to go anywhere, right? Today, people are driving in US in Tesla cars, which are more smart, which have connectivity. I see some cars, I don't want to name the car, where it says internet inside. So when you have connectivity on the go, you want to do banking, you want to do pretty much everything on the go. So just to focus on the flow that Hemant has set up, and Saurabh has spoken, Rajesh has spoken about lending, payments, and all that. I want to take a few minutes and look at what money does for us, right? One is you put money, you pay money, you borrow money, but you invest. You also invest, and what are fintechs doing today? there are so many avenues wherein we still remember going back to traditional trading, traditional investing, where you have things like ICICI Direct or other big companies which have investment accounts, or rather their brokerage accounts. You'll have to still work with somebody, right? But today, Zerodha came in, disruption. Robinhood in US, disruption. All these fintechs are making it so easy to invest. But I just want to talk about one very, very important thing, which is investment advice, right? As millennials and a lot of young people, they want to be left alone. We don't want any advice. We know stuff. We know how things are being worked on. I don't want to hear from some advisor who is old, who doesn't know what's happening in the latest and greatest. It's fascinating how digital advisors are doing, robo advisors are doing. It's fascinating how artificial intelligence, machine learning is, all these machines are cranking up algorithms, cranking up models, cranking up strategies, and cranking up all the portfolios that you want to have based on traditional things like what is your goal, what's your risk appetite, what are your objectives in terms of investing. Taking all those inputs and creating these models has become pretty robust these days, and it's really mind blowing when you say when you just see numbers like more than $500 billion is riding on these robo advisors, 30% increase in just last few years of how robo advisors are giving investment advice, nudging, telling users on how easy is it to advise. And what these platforms also do is they are so quick in adjusting to the parameters that the client has given in terms of goals, like I said, or even objectives. It's really amazing, and I don't think that's possible from a human point of view to change the strategy and to adjust the investments in a way that's profitable to the clients. Keeping the client focus on the top. It would still take, and advice comes with a cost also, right? If you take traditional advice, these are professionals, these are people who are investing their time and energy in understanding the markets, getting to know what's happening in various markets, capital or even alternate markets for that matter. It's really great to see these algorithms and are learning and providing the same or even better advice in fraction of seconds or even minutes for that matter, right? And the cost of these things has come down dramatically. Robo advisors platforms are even charging up to 1% or maximum up to 5% based on the kind of investments that are going. If you have fancy investments of hedge funds and all of those, those are for the high net worth and great minds coming together. These kind of disruptions are taking people into a completely different level and giving opportunities. So what's happening even for the larger banks, if you take larger international banks like or asset management, investment management companies like Morgan Stanley and Charles Schwab or even Vanguard for that matter, is you have to compete with the smaller organizations, smaller fintechs, and they have to provide platforms. And I've seen in the years, fantastic platforms have come in from these large organizations to acclimatize to compete with the smaller companies, which is giving the run for money, right? Robo advisors, digital advisors, whether these are competing, these are very quick in providing advice. There's no bias in terms of which investment is best, which is better, because they're all putting all of these advice at all of the assets or all of the investment instruments in one place, and balancing the portfolio in the right way that's right for the customers to grow the money. Similarly, if you leave robo advisors and like what I said, the disruption is coming in terms of how an individual can sit at home, sit at wherever they are, look at the investments, how they are doing on mobile. In addition to the investments, right, in line to investments, we also have to see how to protect these investments. And Saurabh talked about a lot of digital payments. Rajesh talked about a lot of lending and borrowing and data going across the platforms and data share happening. One of the biggest challenges for whether it's fintechs or financial organizations is data security. And the big threat on the vertical or maybe on the parallel market that's happening is cyber security world or cyber crime world, which is constantly bombarding, DDoS attacks and malware attacks on various of these fintechs, and it's pretty challenging. And I've seen as a technologist how to protect these platforms has become the core of fintechs, right? Because these are not simple data attacks, and very recently there have been attacks that have brought down a lot of industries, not just fintech and financial services, but a lot of industries. And there are few reasons for that. A few reasons for that are most of these fintech platforms are running on cloud platforms. These are all platforms that are open, and not choosing a right cloud platform also could lead to impacts that are catastrophic, not just to the brand, but then the first is customer, right? I mean, we lose the credentials, financial losses being happening. So choosing the right platform is extremely important for fintechs. The other big risk that's happening is the connectivity across the third-party platforms. We have in India, at least we know that the Paytm is connected to a Zomato, is connected to a something else, is connected to something else, and data is moving everywhere. You don't know how your mobile phone is being used, and God forbid if you have the wrong mobile phone. I don't want to say the names of any manufacturers, but we have to be extremely careful on what devices we use, what data we put in on these devices, how these devices are storing our information, whether it's credit card information, whether it's UPI, how it is. And it's challenging for the financial industry to protect this whole info, right? And we're seeing more and more organizations using blockchain, because we all know that from a security point of view, blockchain provides a much more secure data access and secure platforms in that sense. So one other thing on the fintech protection is the education. As I know, the whole knowledge about how to use the platforms, how to even, for that matter, how to even pay, when to use a platform, is because of these malware attacks, right? And if the right education, right knowledge is not provided to the users, users can get very carried away into the phishing attacks, and then that could lead into a lot of information leakage and financial loss as well. But I'm as a technologist has been seeing a lot of systems. I still feel there's a lot of need, and I see a lot of fintechs actually now focusing on rural markets, providing them education, providing people the insights into how to use various platforms to do any of the transactions that we are talking about. The other thing is knowledge about building these platforms, right? We're talking about fintech is digital platforms in whatever form or shape, not understanding the vulnerabilities when you build the platform. And this requires a lot of knowledge in terms of how to build a system that's digitally available, how to remove vulnerabilities that provide loopholes for people to get in and into the system and um, be a victim for these cyber attacks. So all in all, it's a very and most companies are putting millions and millions of dollars just to prevent the cyber attacks happening. Because it's just overwhelming the amount of attacks that are happening. So from an investment and from a protection point, fintechs I think are doing fantastic with like I said, robo advisors, with platforms that are very quickly providing. Today if you see Coin, it provides access to a lot of mutual funds, even a lot of direct mutual funds within fingertips. You can do your KYC online. You can just open a brokerage account within no time. So times have changed. I think there is a long way to go in terms of how we even patronize these fintechs. Yeah, I think it's just time will tell. Hemant.
Awesome, Anil, and Rajesh and Saurabh, thank you for all your inputs. I think we have 20 minutes to go. So I think let's not bore our students with saying 3 old people talking about their experience only. Let's time to make it a little interesting. So let me put it in a format that I am going to now pick up the questions that students are pasting in the chat box. Any one of you can pick up to or choose to answer this question. I would try to redirect it to the person which I think is the most suitable from the perspective that the question is coming in. Please answer that in like maybe 3 lines, 4 lines, or say 30 seconds, so that we can quickly rotate through the questions, because there are too many questions now I'm seeing. So let me start with the first one. This is, I think, from Ankita Bhosle, and she says that when the digital banks and the fintechs move to economically disadvantaged areas, they will have to have physical presence, which may impact their unit economics. I think, Saurabh, if you're there, I think it's a very interesting question considering the approach NPCI has taken to now take digital payments to the remotest of the areas in the country and through the digital channel, and considering that the internet connection is pretty weak in those areas. Saurabh?
Yeah. Am I audible, Hemant?
Yep.
Okay. So Ankita, wonderful question. So the only, one thing which I would like to start with, we all are sitting, at our home or at our, somewhere and talking and interacting, right? That's the power of digital transformation. So I think, having being physical setup, I don't think so that would be that would be important and mandatory. However, I will say this will also help fintech and the traditional platforms both to go hand in hand. So I'll not say that all the fintechs will have will have to go physical, but I'll say physical plus digital. That will be the way. This will definitely impact some of the scale of economy, but this will also help in grow the business.
Perfect. Makes a lot of sense.
So that's my take.
Awesome.
Hemant.
Thanks, Saurabh. Anil, the next question I think is for you. Being a technologist who has worked a lot in not only creating solutions, but also working on increasing the adoption of the solution, because I've seen a lot of solution fail when there's no adoption for the solution, right? The question is, considering that a large part of the country is not financially and technologically literate, and that's a problem that RBI has also mentioned about a lot of time that needs to be addressed. How do we solve for that? How do we ensure that the technology and financial literacy in the country is enough so that people can take advantage of what is happening in the world?
I think this is really a great question, especially for India, where most of country is rural, right? I mean, there's a lot of still people who do not understand even to how to use a smartphone. And we are talking about digital. We are talking about using of a smartphone, and I know of a lot of people, even I don't want to go to my parents, but they anyway are older, but I've seen a lot of fintechs, like I mentioned when I was talking also, now realizing this whole thing, while we we went and created all these platforms, but suddenly we realized now that, hey, look, we created, this is urban population, there is but there is a lot of this rural population that actually is the mass affluent, if I may. So they're investing a lot in making that education go to that with various mediums that are being used to address the needs, address how it is used. One of the things that I'm really happy that a lot of these platforms are made in regional languages, right? Not just English, but it's for a country like India with so many languages and with people really comfortable in their own language, having a phone pay, or let's not take names, but having all these fintech and payment gateways and all of these in regional languages makes a lot of sense, and that is how I think they can reach out to a lot of people.
Perfect. Rajesh, this is an interesting question. I think is one of the most debated questions in the world of fintech, which is saying, what about profits? Looks like everyone is running a business which is being over leveraged or funded by VCs. How does then sustainability happen for these companies which are right now running on VC money? Where does the profit come from?
I mean, very debated question, and I agree with you that this is something is challenging. Though no, it is seen as if everything is being funded. But then one important part, which probably comes with the valuation structure, is the business model of the firm or the organization which is getting the funded through. So that business model, if it has got a possibility of creating a future revenue, then only it will remain sustainable in terms of going for a long way. But to be very fair, and I just because of interest of time, there are a lot of examples we have seen. But to be very fair, this is really a difficult stage where you will never know on which side the ultimate outcome will go, because we've seen the valuations happening like anything for funding structure. And after funding, the models are not so sustainable that they ultimately end up in a kind of a loss-making structure.
Understood. Then going back to the point, there's this question which is raised now often, considering the amount of action that neobanks are seeing. Coming back to Saurabh, what's your view on neobank? What is the impact neobanks are going to have on the market, considering also the regulatory constraint under which they are operating, because they are not in reality banks. They are just a layer over a regulated entity.
Yeah. So I think in the regulatory term, there is nothing called neobank, but I think this is the name which is given by the market, right? So in my simple opinion, and the way we are interacting with a lot of people, a lot of companies, right? So I'll give you an example. A lot of big old traditional companies right now in verge of getting their super apps out. And when we say super apps, right, because payment becomes so important, like, because this is everywhere. Every business needs payment, and if the payment leg is being taken care of, be it lending, be it food, be it your investments, be it your insurance, if this leg is being taken care of, and which also have some kind of consumer behavior or consumer behavior data into it, I think any app can do anything, and with this open API and the API collections which is available, right? So neobank are and banks can also are also now taking that route. So they are also coming up with their own app, or giving lot more than where they were used to give. However, fintechs are these new players are taking advantage, And in my mind, and I'll go with the, Rajesh, stuff where he has mentioned that banks will become the, banks and these fintechs will go hand in hand. However, in my mind, for a smart bank, fintechs will become their distribution center, right? Or an additional leg of business if they have their tech right. It is all about having the right tech and the right mindset of that management of any bank. So that is related to the bank. But neobank and all that thing, it is ultimately all thing ended up to the consumer, and consumers will definitely go for the players or the places or the apps where there is a lot of convenience, right? Less friction, more security and convenience. I think this is the mantra for anyone to go.
Perfect. And to my young friends, I think these three old chaps are beating them in answering the question to the pace the questions are coming. So I think if there are any questions, we have like 10 minutes left. So please keep pasting that. But before that, I have some question that I had received in advance from the student from the IBS faculty. I'll pick one of them up. And Rajesh, for you, you spoke about lending, and SME financing has been like a huge gap for the country. And SME make up the maximum percentage of the GDP as far as an industry is concerned, and considering that they are so short of capital, and I kind of remember a number that is placed around 250 to 300 billion US dollar is the SME credit gap, which is generally mentioned. So how can fintech solve that? How do we solve that problem?
There are a couple of examples in Indian context only that have started looking at those SME lending structure from different perspective. They have started capturing asymmetric and unconditional data for those MSE structures, which will define a kind of credit line for them. Today, the main challenge is the standard traditional banks are a bit wary on giving them those support in terms of credit for various reasons, mainly because a lot of MSEs come from different tier, probably the villages side, or maybe not so developed metro cities kind of scenarios where these businesses are based out of, and then they lack those credibility and credit worthiness. So that is where they have a major challenge in terms of getting the support. But it is basically the defined system of banking, well supported by government, because government has also started pushing on. Of course, there are policies and there are lapses which are still getting debated and getting tried out. But there is a better picture in terms of accessibility to those credits. And these accessibility is well featured by fintech by providing the necessary structure for credit evaluation. So I think we will for sure will see in next 5 years there is a good credit evaluation structure supported by fintechs, which will be provided as an input to banks, so that bank will also start pushing money to these SMEs.
Understood. And just to add a line on what Rajesh just pointed out, earlier we were lending on the past history of the SMEs because that's the credit score. Now going forward, and even there was this document which came from the central government as well, the move is toward cash flow based lending. So that means the future of lending for SME is going to be based on the cash flow that the SME is getting, not on the history that the SME has, which solves for the problem which Rajesh pointed out, which is having a thin file or no file of credit history for an SME. So this is a short answer to the entire thing. Anil, you slightly touched on this one topic when you were ending your brief on the protect and invest part of it, which is on security and trust. There is this question that Swapnil Verma raises of saying, can we trust fintech companies considering that the instances of data leaks or data hacks are continuously increasing?
Well, that's a very difficult question to answer because the trust. See, there are two aspects of it, right? One is how choosing the right fintech, choosing which is doing right in terms of technology, but with the kind of cyber attacks that are happening, like I mentioned, it's very difficult to say that there is no attack. At the same time, we just have to identify the right technology. We just have to identify the right fintech using the right technology. And from a user's point of view also, we have to be very careful in the whole understanding of how the whole internet is working. What is the vulnerability? Where are you putting your data? I would say the onus is on both the fintech as well as users. But from a trust point of view, I would be very cautious in putting my data anywhere in any platform, to be very short.
Fair enough. Fair enough. Now, again, there's this question from Vachasya. Apologies, I've pronounced your name incorrectly, because nowadays I feel parents are naming their kids with even more difficult names by the year as it goes. But Vachasya asks that neobanks have attracted $90 million in 2020 and are contributing significantly to SMEs. And he has not said retail, but I think it is more retail as well. And they offer faster customer acquisition, but that's debatable. But still, your take on this, please. How do you see it happening? I think Vajay, this is a question which has been just answered by Rajesh, so I'll skip that question. The next question basically asked is by Nitya Bhargav, and she says that with an industry changing so fast and AI, open data standard, machine learning, and many more so different acronyms impacting the industry, what should a management student like the students which are on the call do from their side, so that one, they are ready for the industry. Second, they can contribute to this changing industry. And this is an open question. I think any one of you can pick it up. Okay, I think it's easier.
I think if I take a first shot at it, see, fintech. The answer is fintech. So the technology is always there within the financial. So both go hand in hand. My experience has been understanding at least a high level by a management student, understanding technology. Gone are those days where somebody says, I'm a financial advisor. I don't even know how to operate a computer, or I don't know how to print a document, right? So those days are gone in what I feel. Technology is part of everything. Understanding technology to an extent where if you want to write an algorithm, if you want to create a robo advisor for that matter, I talked about it, right? You need to have some basic understanding of how data works first. What kind of data you want to capture. AI ML comes in after that, right? What is data? You need to understand. You need to learn about how data works, how to capture data, what kind of data you want to capture, where do you want to store it, how do you want to do it. Then analytics comes in. Then the machine learning part comes in. But I would say now technology is part of anybody's domain, and it goes hand in hand with all domains.
Perfect. So I think I started and set the context for the entire discussion, and we are like on the top of the hour. So what I'll do is I'll take a liberty of doing a closure on the entire discussion. First of all, thank you, Rajesh, Saurabh, and Anil for your inputs on the different topics on fintech. It's a huge value addition or input insights that I have got as well. As a closing comments for the students, I think all 3 or 4 of us are sitting in the industry, but there is so much happening in the industry that even just reading regulations daily takes about an hour for each one of us to just keep pace with our 4 regulators of what has changed today and score to our business. So I think what is extremely important for you guys is you will have to extract the signal from the noise which is out there. And for all the points that we have touched, I started with saying that everything is going back to a loop. There are a few more rule of thumb that I would like to add. Any industry, when it starts, and as Clayton Christensen, who wrote Disruptive Innovation, says, it will start with unbundling, but when there are powerful companies created, it will get back to rebundling, and then it will get back to unbundling. So that's a cycle which will keep repeating. So when you analyze this fintech industry, keep that in mind. Second is, for any innovation, keep in mind that regulator is not there to support innovation. It is there to protect the consumer. So it is the check that we require in the industry, and a lot of time people paint our regulator as a villain. But believe me, it is not a villain. It is there to protect the consumer once the problem becomes large, or the innovation is to a level where it may risk people who are not as financially literate as the people on this call. So take that also with a pinch of salt when people say this. And when you look at this industry, just keep in mind that read a lot of news, but focus on extracting insights out of it and understanding, and it can be done when you look at it from first principle. As Elon Musk says, when you're looking at a problem, look at it from always first principle perspective. With that, I'll close for the discussion on behalf of all the panelists and hand it back to Dr. Bidhan and the students.
Yeah, Thank you everybody, all panelists. Okay, it was really wonderful discussion. So there were a couple of questions we also received to our co-host, but due to paucity of time, we are not taking that one. So I'll request Janvi, our anchor, to proceed further.
Yes, sir.
Janvi, yes.
Yes, sir. Honorable speakers, respected teachers, and my dear friends, it is my privilege to propose a vote of thanks on this occasion. I, Janvi Yadav, on behalf of IBS Pune, extend gratitude towards panelists for sharing their thoughts and opinions today. Thank you, sir, for taking out your time for us and encouraging us with your valuable output on the future of banking in the era of fintech disruption. This perfect support and guidance was what we all needed right now. Your fruitful thoughts will help students to broaden our horizon on fintech and banking. We are all inspired. Once again, a very big thank you to you, sir, for your efforts towards raising our morale in these bleak times of global pandemic and crisis. We look forward to more such interactions. I would like to thank Professor Jyoti Tilak, Director IBS Pune, Professor Soumitra Samadar, Deputy Director Placement, Dr. Bidhan Datta, DPCO, and Dr. Soumya Mishra and placement team to organize this valuable event. I would also like to thank the Digital Ambassador and System Administration for technical support.
Okay, thank you, Janvi. Thank you, everybody. We are going to close the recording now. So the admin, you can close the recording.